Hello, everyone. Okay, hi everyone. Before I start, just want to make sure all the technical stuff is working. Testing. Hello. Hi there. Okay, everything's working. I can hear myself. I see the screen working really well. The chat is working. Hi. Okay, I've started a bit earlier. Again, because I was just doing some technical checks, and when I did the technical checks, I accidentally started a bit earlier, but it's okay. I'll spend the first part doing introduction anyway, so by the time everyone comes on at 5:30, I will be done with the introduction, and we will actually start with the live session. In the meantime, let me just get my stuff ready, my charts ready. Hi, Jamilu. Hi. Okay, I see people already joining. Just give me a moment. I started a bit early, so I'm just gonna use this time to prepare my charts since you guys are already here. Oh, okay, cool. Since there are already people here, I'm just gonna start. So by the time I'm done with the introduction, I think everyone would have joined in already, and we would be in the live session. Okay, hi everyone. Welcome to today's exclusive webinar brought to you by IC Markets Global. We're going to do a live analysis session today. What that means is that I'm basically going on the charts and I'm going to show you guys how I usually do my analysis. Okay, that does not mean that it is any form of signal to get in for a buy or a sell. I am just showing you my technique, and it is your job on what you want to do with that technique that you see me using. Okay, whether it's for you, whether it's not for you, you need to figure that out. Okay, I am gonna have to do the disclaimer. This is a very important part of the webinar, so I will stay here for a minute or two so you guys can read through the disclaimer. But basically, the disclaimer is a reminder that this webinar is purely educational. It should not be construed as any type any type of financial advice, any type of investment advice, or any type of signal to buy or sell. Again, this is purely educational. IC Markets invite us to show you guys how to do the live analysis session. When I say how to do it, I'm basically showing you how I usually do it. Okay, there are hundreds or thousands or hundreds of thousands of profitable traders out there, and they all have different styles of trading. So I'm just showing you guys one way of doing live analysis session. This is not the only way to do live analysis session. So a risk warning: trading forex and CFDs, especially if you are trading on margin and and high margin for that. Okay, it carries significant risk and may not be suitable for all investors, and you may lose more than you intended. Okay, so please ensure that you fully understand the risks before you jump into this, especially for those who are new. Okay, like, don't jump into the ocean before you actually learn how to swim. So it's just the same thing. Don't trade unless you are already versed with the basics and the foundation. Okay, I'm going to stay here for a minute or two so you guys can read through, and then we can actually proceed. Hi, Andres. Hi. Okay, I think that should be sufficient time to read through the disclaimer. I'm gonna proceed with the webinar. Okay, so I'm gonna start by introducing your host, which is myself. For those who are here every week, you already know who I am. My name is Cassandra. You can call me Cass. Okay, I am an investment analyst at Everest Fortune Group, and I'm also a certified prop trader. Okay, so Everest Fortune Group is a research firm that specializes in forex and equity research. What do we do here? We basically backtest a lot. We forecast where the markets are going, and we basically study the charts a lot. Okay, so that's our job. Okay, so as a prop trader, I am funded by different companies. So how did I get funded as a trader? I had to pass a test. That test required me to do 10% profit within a month, within 30 days. So I've done that multiple times. 10% to me isn't that hard. I've actually done that many times already. So hopefully when I show you guys how I get that 10% today by doing the live analysis session, you kind of have a rough idea what to implement into your own trading style. Okay, I say what to implement into your own trading style. I don't say like you must copy me. Okay, you shouldn't copy me. You should do whatever works for you and your lifestyle, your account size, and whatever it is. Okay, agenda for today, key approaches, cheat sheet, checklist, and then live charts. The key approaches, we're basically gonna touch on that later when we go to the live charts, but this is a very important part. This is the cheat sheet checklist that we use at Everest Fortune Group. So at the research firm, we noticed that these are some of the things that you can use that can bring your trading to higher probability. Okay, the first things first is I always ask myself as a trader, is price going up or is price going down? So if price is going up, what I want to do is, or going down, what I want to do is use a trend line to look for trend. So if it's going up, I'm looking for a buy entry. If it's going down, I'm looking for a sell entry. You can also use a descending or ascending channel. Okay, it requires minimally 4 touches, 2 on the top and 2 at the bottom, and then you can come up with your analysis. So once I'm done with identifying trend, I now move on to horizontal levels, because this will work as your entry, your take profit, and your stop loss. Okay, so these horizontal levels, pullbacks, overlaps, significant swing highs and swing lows. These are so important. If you have not already mastered support and resistance or horizontal levels, please go and master it. I will also combine things like Fibonacci, because this also shows you horizontal levels that you can kind of find confluence and combine with that support and resistance that you see on the chart. Okay, other than that, I will ask myself, are there any chart patterns? Are there any golden or death crosses? Golden or death crosses, you can basically use a SMA, right? Or EMA, you can use either one. I like to use the EMA actually when I do use it. Sometimes I use the SMA because I forget, but I think the EMA is more current with the data that it's showing. So you can change the settings to 200 to 50, and then that will give you like, if the 50 is below the 200, it means that price is showing bearishness. If the 50 is above the 200, it means that price is showing bullishness. Okay, on top of that, When I say chart patterns, I mean wedges, triangles, double tops, double bottoms, teacup pattern. What's that called? The one that looks like a butterfly. I can't remember what's it called right now, but basically these are the patterns that you want to like identify on top of whatever that is on top of this three. Okay, if you can identify it, it's better. If you don't identify, you don't see any, that's okay too, because anything other than these three, anything other than horizontal levels, price, hi Clinton, trend line channels and horizontal levels, they should just be your supporting data that helps you make your decision. So when I say supporting data, I mean like if your analysis is showing a buy, you now want to pull out like the moving average. You also now want to see if there's any chart patterns and whatnot to help you make your decision better. Okay, to give you a higher probability decision making. Okay, on top of that, if you cannot find any golden or death crosses, you can try looking for a natural moving average. So natural moving average, I have had many webinars where people ask me, okay, how do I do natural moving average? You basically need to tweak the settings in the moving average to flow with the current price. So you know how like this is price, right? And then there's a moving average on top or below, whatever it is. If the moving average is constantly chopping where price is, it means that the settings for the moving average is not working very nicely. But if the moving average is flowing nicely with the support and resistance of where price is, you know that the settings is solid, and that is something that you can consider using. Okay, so on top of that, I do use stochastics and RSI very frequently. For stochastics and RSI, I use it to find support and resistance, and I also use it to find diversions. Okay, this is very important to me. And the other thing that you can do is using correlation. So when I say correlations, for example, if you're trading the USD CAD, you want to also check the prices of oil. Why? Because Canadian dollars is very much tied to the price of oil prices. If Canadian dollars goes up, usually, not all the time, usually, it could just be that their economy is doing really well. Okay, usually oil prices is also going up. It's the same for other currencies like the Australian dollars, New Zealand dollars, if I'm not mistaken. Okay, I cannot remember offhand right now, but yeah, I just know that there are a few currencies out there that are linked to commodity prices. Okay, so for Canada, for instance, it's linked to oil prices. Okay, so other forms of correlations is using currency pairs that are supporting your bias. So for example, if you are going to trade EUR USD, it means that you are either going to buy or sell the US dollar, right? So what you want to do is you can also do your analysis on DXY. Why? Because DXY is the US dollar index that you can do your analysis on. So let's say you're buying EUR, that means you're selling the USD, you're shorting the USD. So DXY should also be going down. Okay, that's where you get your correlation and your double confirmation or triple confirmation. And the other correlation that you can use is using major currency pairs. So if you do an analysis on AUD, USD, for example, usually more often than not, I mean, I won't say all the time, but usually NZD USD and AUD USD will be going in the same direction. So if you are deciding that AUD USD is a buy, usually NZD USD will also tell you that it's a buy. Okay, so it could be moving in the same direction, but your entries and your stop loss and your take profit could be different. Okay, so on top of that, once all of this is done, that means you've already done your analysis. You now decide where you're going to go in with your reversal or your breakout. Okay, I've mentioned this many times. I'm not so much of a breakout trader because I have done back testing on it and I did not see favorable results, and that's okay because when I did like bounces and like reversals, I found very good results, and that's the whole point of trading. You use things that works for you. If breakouts doesn't work for me, I'm not gonna force myself to use a breakout because then I'm not going to win in trading, right? I want to use things that are actually going to help me make profits in trading. So in my case, I don't use breakout that often, but I know many profitable traders use breakout. You can. It is in the cheat sheet checklist. Excuse me, guys. Okay, it is in the cheat sheet checklist. So if you cannot find any reversals, maybe you might find a breakout, but only do it if it is something that you have done back testing on and it works. Oh, thank you so much. Okay, so I am done with that. Thank you for sitting through that introduction. Okay, thank you from IC Markets. For those who just joined, I know we are scheduled for 5:30, but I did technical check, so I just wanted to see if the mic, the screen, and everything was working fine. So I clicked start. So I started about 15 minutes ago. So we will be ending 15 minutes earlier because these webinars are usually 1 hour, and that's okay because if the front part, the first 15 minutes is nothing much, it's mostly introduction. If you are a regular here, you would have sat through my introduction a lot. You would have known what I was going to say. Like the introduction should be, it's the same every week. Okay, so you're not missing much. You just have to replay it if you want to go through the introduction. But the disclaimer is still valid, okay? No matter what time you join my webinar and no matter what time I started, the disclaimer is that this webinar is purely educational. I know it says live analysis session. It basically means that I'm showing you how me, Cassandra, does analysis. I am not asking you to follow my analysis, okay? Hi, AJ. Hi, Jamilu. Thanks for asking. I've been thinking about you. How is your recovery going? Okay, I'm fully recovered. I definitely caught a virus. I don't know what virus that was. But it was something to do with like the lungs, I think. Like something I cannot pronounce it, respiratory. Okay, so it's something to do with like the lungs and coughing because like my throat was so bad. But yeah, thanks for asking. I think things are expected to sicknesses are expected to increase. I have a friend who works in healthcare. So as you guys know, I am in Singapore, right? So I have a friend who works in healthcare, and she said that it's not surprising that people are catching so many viruses because there are a lot of countries just taking in like refugees and like people who are not vaccinated. Therefore, they're also bringing in viruses that the country is not used to. Okay, yeah, but anyway, that's a topic for another day. Okay, so I did an analysis last week on EURUSD. Can you guys let me know in the chat box if I did analysis on anything else? I don't remember because I did not trade last week. As you guys know, for those who followed me last week, I was really sick last week. So I told myself, I know I'm not going to make the right decision when I am not feeling well. So therefore, I did not trade last week. So my profit and loss for last week is 0. Okay, it's nil. Okay, so I did do analysis anyways. Like I still do my analysis every week. Just that I personally did not get in. So other than EURUSD, can you guys let me know in the chat box if I did my analysis on anything else? Let me see if I did it on Ethereum, because usually if I have done my analysis, it should show up. Okay, so I called a sell for Ethereum. Oh, what a waste. Called a sell, I didn't get in. Hi, Buddha Lama. Yeah, I remember calling this sell on a Wednesday and it worked out beautifully. I don't know if I called this with you guys on Tuesday or on Monday, or if this was with my Bahasa, this was for my Bahasa webinar. Okay, so I remember doing EURUSD and then ETHUSD. So let's just review what the analysis for last week. Okay, so this is very important. No matter what happens every week, whether you win or lose, you need to come back and do a revision and review what went wrong and what went right. So right now I'm looking at the EUR/USD analysis that I did last week. Okay, so the first thing I see is A did not work out. So I had two possible entries, which is A and B. Okay, this is also why you should write notes, because if you don't remember, your notes are going to remind you. And I wrote here dangerous setup. Okay, expecting for price to bounce here. If it doesn't bounce, it means that it will be a breakout. Okay, as you guys can see, it's kind of bouncing at the entry right now, but obviously we need to wait for this candle to close, because if that candle doesn't close, then we don't know the characteristics of that candle, whether it's a continuation candle, whether it's a reversal candle. If it's a reversal candle, I would have quite a bit of confidence to get in for this buy. Okay, if this is a reversal candle, I would have some confidence to get in for a buy. But if it's depending on how this candle closes, that's when I decide whether I'm going to get in for the buy. Okay, so I had two entries and I wrote here possible but not favorable entry. So A is a possible entry but not favorable. So therefore, I marked B as gold. So B is the golden entry. Okay, I'm going to get rid of A. A is not relevant to us anymore. So the most favorable entry right now is a B, which is this golden box that I've marked out, which is basically where price is right now. But I need to redo my analysis again to make sure my analysis is still valid and sound. Okay, so I did right here dangerous setup. Price is likely to bounce at the green or the gold, but more likely to be more likely to be the gold. Okay, so the green is out. That's totally okay. Gonna get rid of this because I got rid of the green already. Okay, so I was calling for a bounce here on the gold. Let me see why. I don't remember, guys. I was sick last week. I don't remember every week. That's why I write notes, and that's why I come back and review. And my notes will remind me why I did certain things. And that's also why you should do trading journal. For those who are here waiting for a signal, just to remind you guys, this is an educational webinar. I'm not here to give you guys like a signal to buy or sell. I'm here to show you how I usually do my analysis. Okay, I'm here to show you how I usually do my analysis. So far, not. I'm trying to like make sense of this. That's why I don't like trend lines, because depending on how you draw the trend line, it could be an uptrend. This could still be a valid uptrend, right? This could be a valid uptrend because a valid uptrend requires 3 touches. 1, 2, and if it bounces right now, it's 3, right? But if you draw it a certain way, it looks like it's a breakout. Okay, it looks like it's a breakout. So I'm more inclined to believe that we are still on an uptrend. Let's go to the weekly to see what the weekly is saying. Okay, weekly has reached a resistance. I think what's going to happen is price is going sideways. Okay, so let's gather the facts. The first fact that I see right now is that on the weekly chart, you can see price kind of going sideways. It's been going sideways since July the 7th, okay, or 30th of June. So it's been going sideways for 4 months. Is it gonna stop going sideways? There's no reason for us to suddenly think it's gonna stop, right? Because unless there's an indication. So therefore, I'm just gonna write down my notes, and in the notes, I'm gonna write weekly is going sideways. Therefore, there is room for it to be bouncing up and down, right? There is room for it to be bouncing up and down within this take profit. Okay, I'm going to get rid of this so that it's clear. Within this zone here, which is the last take profit, and within the low here. Obviously, it can go it's bouncing within this box here because of this wick. Okay, so if this week it wicks, I will get wicked out as well. Okay, so ideally, we're gonna have to go down to the smaller time frame to see what is the best possible stop loss that I can put. So right now, the first information that I have is that price is going sideways on a very big time frame, which is the weekly, and we are at the bottom part. Okay, if you pull out that box, where's my box? Rectangle, there you go. The bottom part starts right now, actually. Yeah, so we're kind of in that box where it's time for a bounce if price is indeed going sideways. But if we're just focusing, if we don't focus on this candle here, right, the candle on the 28th of July, technically price is only going sideways within this area, okay? Within this area, and now it's at a support. So if it's still going sideways and it's still respecting this rectangle here, that means we can assume that there is a chance price might just reverse right now. Okay, are you guys following? Am I like, is it confusing? So what you want to do is put your stop loss. You can put it under this candle here, or to be very safe, put it under this candle. So therefore, you are totally outside of this box. You are totally outside of this box. That's not a good color to choose, sorry. Yeah, you are totally outside that green box, and you should be safe if price reverses. Okay, you should be safe if price reverses. It should miss your stop loss and then continue to move within this green box. Okay, the best case scenario right now is we want price to move, continue to move within this green box. And there is a sign that since August the 25th, sorry, 4th of August, so the last 2 months, price has been going and moving within this green box. So right now, the first information that we have is that weekly it's going sideways. Therefore, wait, sorry. It's at a support right now. Therefore, possible bounce at support. Okay, so that's our first data that we have collected. Okay, I'm gonna put this here and then I'm gonna move down to the time frame. Okay, let's see what else we can collect. I'm gonna get rid of this box. You get my point, right? You guys get my point? Oh, actually, yeah, I mean, I feel like this could just, sorry. Yeah, you know what? I'm quite happy with this. I'm quite happy with this analysis. I think this was a fake out. It's a fake out, and then price started moving within this zone here. Okay, so I think I'm quite happy with not putting so much thought into this part here, because it looks like it's a fake out and that was just purposely done to take people's stop loss. If it happens again one more time where it does a fake out to purposely take people's stop loss out, then you know, I feel like that's just luck, and we've already done our best to try to avoid it. Okay, I mean, the best case scenario is you move your stop loss under that last fake out, but I don't know. I feel like, do we really want to play that safe? Sometimes you need to risk it to get the biscuit as well, right? So you can be as safe as you can, but not too safe to the point that it doesn't make sense anymore. Okay, so because if I put the stop loss here, I'm very safe. I would say I end up becoming very safe, but my risk to reward just doesn't make sense anymore, because then I'm trading a 0.87 risk to reward. Even if I put in a very good entry, it's only a 1-to-1. Okay, whereas if I take a bit more risk and just put it under this candle here, if I just take a bit more risk, then I have better odds. It should be a 1-to-3 if you're getting in at a better price. Okay, so that's that. Okay, so let me see. Now that we're on the daily, let's see what the daily is saying. So daily is saying Remember the cheat sheet checklist, you can use a trend line or you can use a triangle. So which is exactly what I'm doing. I'm using a triangle. So I don't get it. Who's been changing my settings? Okay, someone has been changing. Okay, there you go. My settings. Okay, so if we are on the daily, sorry, did I say triangle? I meant channel. Okay, daily is moving in channel, suggesting upwards movement. And sorry, and price is at channel resistance. I mean, if it reverses now, it will make a resistance. Possible bounce. Okay, so we've got two things supporting our possible bounce. Let's go down to the 4 hours. Okay, what is the 4 hours saying? So the 4 hours, if we look into structure and we just focus, you can see that price was going like on a very nice trend. Okay, price was moving in an uptrend. And then depending on how you want to draw it, but yeah, it's clearly making higher highs and higher lows. Okay, it's only here it started to make a downtrend. Okay, so the only part that I'm not too favorable about, the only time frame, is that the 4 hours is showing a possible trend reversal. Sorry, I don't know where the channel is. There you go. Okay, the I'm gonna put that red. So red means that it's going down. Okay, I'm gonna take this with a pinch of salt. Why? Because it could just be a pullback. This could just be a pullback of a higher time frame. Okay, so the higher time frame is definitely making higher highs, right? It's definitely making higher highs and higher lows. So this could just be a pullback. I mean, our job is to collect data and then decide what we want to do with the data, right? So I've collected the data and I've decided that the data could just be telling me that it is a pullback. So now what I'm going to do is number one, my next cut of action. Okay, so this is our first red flag. Okay, this is our first red flag that doesn't agree with my ideology. Okay, it doesn't agree with my analysis. So I need to be cautious here, right? I need to be cautious because what if it ends up being a breakout, right? What if it ends up being a breakout? Okay, so now let me pull out this again. We've already used our channels. Do you guys see any chart patterns? Let's see. Let us see. Are there any chart patterns? Any double top bottom, any head and shoulder, inverse head and shoulder, any wedge, triangle, whatever it is. Okay, nope, don't see it. Okay, so now let's use the next thing on the list. So we've already done this, and this. Let's try to see if the golden and the death cross tells us anything. Okay, so let's see the 200 and the 50, if it tells us anything, if it's going to tell me anything. If not, then I'm going to try using the moving average. Okay, this is just for the sake of using the cheat sheet checklist. And then I'm going to pull out stochastics to see if it's telling me anything. And then I'm going to try to using correlation by pulling out the XY. Okay, by pulling out the XY. Okay, so let's first pull out EMA. We're pulling out two EMAs, by the way. Why is it only one? You can use the SMA, you can use the EMA. I recently prefer using the EMA because I think the data on the EMA is a bit more, not as laggy. Okay, so the rule here is, I'm going to change the 50 to red. If the red is moving below the blue, that means we are on a downtrend. If the red is moving above the blue, it means that we are on an uptrend. Okay, so you guys can see here for the longest time, right? For the longest time, the red was moving above the blue and price just kept going up. It just kept going up. There was only one instance here where price moved below. Okay, this was the only instance where price moved below, but then it continued to move up, and then now is finally the second time since the 14th of Valentine's Day. Okay, since the 14th of February, where price has now the 50 EMA is moving below the 200. Okay, so now this is another sign of bearishness. Just remember, your job is just to collect information and then we decide again. So this is called a death cross, right? Death is when it is bearish. Okay, red flags, another red flag. What's the next thing on the list? We don't need the natural moving average because we've already used the death and golden cross. So now stochastics and RSI, stochastics, and then we're gonna pull out DXY to see what DXY is saying. So for stochastics, I'm using 21, 5, and 3. These are the settings I usually use, okay, to make it a bit more smoother. Okay, what am I looking for? I'm looking for divergence. Okay, I'm looking for divergence. So price is going down here, and on stochastics, RSI, it is also going down. That's actually a bullish divergence here. Can you guys see that? There's a breakout happening here. This is actually a bullish divergence. Okay, so there's two things that I want to see when I pulled out stochastics and RSI. The first thing that I wanted to see was I was looking for number one, divergence. And number two, support and resistance. Okay, support and resistance. So we can see that, is this a divergence? This could be a hidden divergence. Okay, it doesn't matter. I can't use stochastics to look for divergence because of the settings that I put. It's not giving me very smooth readings, and that's okay. So for stochastics, what I'm gonna do instead is pull out support and resistance. So if you guys see on the charts, okay, follow me, like look at the horizontal levels. Every time price reaches a resistance on the charts here on stochastics, here on the charts, it's also making a mini high. Okay, so you see, every time it reaches here, then it makes a high. It reaches here, then it makes a high. It reaches, well, this part didn't really reach, right? It didn't really reach. Hold on, give me a moment. Actually, I do see a divergence for stochastics. I do see it. Sorry, I don't remember. That's why I'm pulling out Google because I don't remember, and that's okay to not remember. You can just reference. You are not expected to remember everything. So on the charts, it's going down, right? But on I'm trying to see if there's a hidden divergence. Yep, okay. So on the charts, can you see here the weak reversal? Charts is going down, but the oscillator is going straight, right? Can you see that? So price is going down here, but on the oscillator, price is making horizontal levels, right? It's just going sideways. It's just making horizontal levels. Okay, this could be a bullish. Okay, it could be a bullish, and also because there's also this breakout happening here. There's also a breakout happening here. Okay, so both RSI and stochastics is showing bullish divergence. Hold on, just give me a moment. I think we are at a okay, so what are we doing? I think we've collected all our data. The last one is to pull out the XY, right? I already kind of have a rough idea what I want to do. Okay, I already have a rough idea of what I want to do. Okay. We can all agree that DXY is definitely moving on a downtrend, right? Is anyone else seeing something else? Okay, if I remove everything, we start with a clear charts. It's clearly moving on a downtrend, right? Even though it doesn't fit very well, you can see it's clearly making lower highs. Okay, right? It just kind of, I mean, depending if it shoots up, then yeah, we have to talk again. But right now, it looks like that's the high, and it's making lower lows. Okay, is it making lower lows? Yes, it is making lower lows. It's not very obvious, but it did make a lower low here. Okay, so I would say that DXY is definitely down. So it's safe to believe that I won't say weak downtrend, but yeah, it's not lower lows and lower highs. Okay, so what am I gonna make of this? I'm gonna get rid of this. Okay, so out of everything here, you now need to, what I'm gonna do is I'm gonna ask myself, which one do I give the most priority to? Obviously, I'm gonna give the most priority to the weekly charts because the weekly charts usually has the strongest structure. Then I'm gonna use the daily charts. I'm gonna give priority to the daily charts as well. The 4 hours structurally, the smaller time frames will tell you a story, but usually the structurally the stronger ones is the bigger time frames. Okay, so one thing about the death cross, which I feel like it's okay to ignore or not give so much priority to, is because the problem with this is that it could have just been a fake out, right? So let's say, okay, let's say I pull out the EMA again. You can see that here, thank you so much, AJ. Okay, so you can see that I'm gonna change this to red again. The 50, the smaller one is 50. Okay, the red, it could just be a fake out just like this. So since Valentine's Day, which is 14th of February, the red has always been moving above the blue. It has always been like that. It's just that this part here, there was kind of like a fake out or like a strong pullback, right? A strong pullback. And right now we're seeing that same breakup. Okay, is this a confirmation of a trend reversal, or is this just a strong pullback just like here? I don't know, but I think it's okay for this one time to give it a go and to give it a chance and to believe that it could just be a fake out. Okay, it could just be a pullback. Okay, so I'm gonna ignore or not give this so much weight. But because I do see it here, I do see the two red flags. So instead of risking my usual 1%, because there are two red flags here where there's a death cross, and also because there's a short-term downtrend on the H4, okay? Even if the H4 is just a pullback, you don't know if the pullback has ended or not. Okay, so instead of using 1%, I'm gonna end up using 0.5% instead. Okay, why? Because there were two red flags. If everything was showing me that it's a buy, I would definitely use my 1%. Okay, I would use my full 1%. But in this case, because there's two red flags, I'm gonna decrease my risk by half by going 0.5%. So if you initially planned to risk $1,000 for this trade, now because of the two red flags, you can only, like, I'm gonna risk like only 500 because there are signs that I could be wrong. Okay, there are signs that I could be wrong. Okay, so yeah, I'm gonna go ahead and only get into this buy. Actually, I might just change my stop loss, sorry, my entry to somewhere within. I'm gonna widen my entry. Okay, I still think I think it's a possible buy, but I'm gonna widen my entry. Why? Because when you guys see, if you guys have learned smart money or ICT, you know that if the zone has a lot of touches in that exact same area, it's usually a trick. Usually the entry is the next low rather than this high. Okay, I can't remember what's it called. It's called I'm sorry guys, I have to. Okay, it's called what is that word called? Okay, basically it's done on purpose. I can't remember what's the name called, but it's done on purpose so that you get stopped out prematurely. So instead of the entry being here, which they know a lot of people are going to put their entry here, right? They know that you're going to put your entry there. Why? Because you guys are retail trader and you guys all think the same. What they're going to do, the ICT or the smart money is going to put their entry here instead. I think it's called an inducement. There you go. There. An inducement. There. Okay. So instead of putting your entry here in this yellow box, you put it lower where it's not a trick. Okay. So can you go back to 1 day time frame, something like bearish divergence, or I double top waiting to break the neckline? Okay, let's go to daily. Something like bearish divergence. Bearish divergence. I see it. Okay, nice catch, Jamilu. Nice catch, nice catch. If price is moving up, bearishness. If price is moving up, but it's going down on the oscillator. Okay, actually, I don't see a divergence. That was not a valid divergence. Okay, why? Because if you're looking at the charts, if price is going up, but on the oscillator, okay, see this one, the strong bearish divergence. If price is going up and on the late oscillator it's going down, that means that's a bearish divergence, right? But do you notice that the arrow is on top of the charts? So I need to put this on top for this to make sense, right? So if price is going up here, if price is going up here, here on the charts it needs to be going down, but that's not the case. It's not really going down except for this part here, but that part on the charts is also going down, so there's no divergence. Do you see? It's also going down, so there's, oh wait, it's not going down, sorry. Okay, this could be a divergence. This could be a bearish divergence. Okay, we are going to end up having analysis paralysis. Does it make sense to use the 15 minutes time frame? Yes, you can. If you are scalping and you want to find an even better entry, you can consider that. But yeah, inducements to make you enter, then to sweep. Yeah, that's true. Okay, that's basically the inducement. Okay, so I don't want to overanalyze. I'm just gonna stick with my analysis, because then I would have too many, like some is showing up, some is showing down, and then I'm gonna get analysis paralysis and end up not getting in. I think there's two options here. Okay, based on all the information that has been collected, based on all the information that has been collected, your first option is number one, course of action. Your course of action is to, number one, get in at lower risk because it's not a high probability setup. Or number two, just stay out. Okay, because there's too many red flags. I'm starting to see red flags, and yeah, there's just too many red flags, so the other option is to stay out. Okay, so what am I gonna do? For me, what I'm gonna do is wait to see if there's a reaction here, a rejection here at the entry. If there's a rejection going on here at the entry, I might still enter, but at a lower risk. Okay, stop loss being somewhere around here. Okay, I don't think this is a high probability setup. There's too many red flags. There's too many things that are telling us that no, don't get in. There's a divergence, there's a bearish divergence, there's a bullish divergence, okay, whatever it is. Okay, so there's too many red flags, but if I still end up getting in, I'm gonna get in at a 0.5. Okay, and I'm only gonna get in here at this lower swing low. Okay, at this lower swing low here because of the inducement that I was talking about. Okay, because of the inducement that I was talking about. So an inducement is like when you see price all reversing at the exact same spot, when in this case is this exact same spot here. This spot is usually a trap for an entry, because a lot of retail traders would be like, okay, it came here 3 times, it's gonna come here the 4th time. So a lot of retail traders are gonna put their entry here, and then they're gonna put their stop loss here, and then they're gonna get stopped out prematurely because it ends up that the entry was here in the next swing low and the stop loss was lower than that. So I'm still gonna give this a chance. Maybe if I see a reversal pattern candlestick, I'm still gonna give it a chance if I so happen to be in the charts too, okay? Because you guys know my style. I usually put a buy or sell order, and then I might get in, because I still like, The red flags are not red enough for me. I don't know if that makes sense. I'm gonna move my stop loss though. I mean my take profit. I'm gonna move it like way lower. Maybe here. Maybe here where the overlap is. Okay, so this is gonna be my trade, which is 1 to 3, and I'm happy with that. I'm pretty happy with that. If price comes down to my entry, I might just get in. Okay. I might just get in. Oh my gosh, another red flag. You know what? Again, I did not come up with a good setup for this, but again, just a reminder, this is purely educational. I'm just showing you guys how I do my analysis, and this is exactly how I do my analysis. And sometimes I do my analysis and there's really no trades. So I just pulled out Ichimoku, and you guys know how much I love Ichimoku, even though it's a lagging indicator. And Ichimoku is showing a sell. Okay, Ichimoku is clearly showing a sell. Not only is price moving under the cloud, the blue is also moving under the red. So the blue and red moves is some kind of moving average. The settings for this moving average is basically 22 and 52, I think. Sorry, 26 and 52. Yeah. The lagging span and the baseline. Okay, so it's basically saying that it's a downtrend. Okay, so you know what? If price comes here later and for some reason this lagging indicator Ichimoku is showing that the blue is suddenly crossing the red, I will consider a buy still. Okay, if the blue suddenly just crosses the red, I will consider a buy when price gets here. Okay, so that's all I have for EUR/USD, but otherwise there's too many mixed signals, and some of the signals are saying that it's a sell. Okay, so let's move on already. Let's just move on. Let's just move on. Okay, so this was one of my trades last week and it worked out very nice. Okay, I called this trade on Tuesday. Yeah, I called it exactly when it was an entry. So I called this trade here. Wait, sorry, that's not when I called it. Okay, wait, this is here. Okay, I called it when price was here. And then my analysis was showing that price is just gonna reverse right now. Like at this point here where this green box is, because there's a lot of Fibonacci levels. There's a lot of Fibonacci levels there. Okay, I'm glad this one worked out. I personally did not get into this trade because I was sick last week, but if you guys joined my webinar and it helped you make a decision to sell ETH, then you would be in profit. Okay, so let's redo my analysis. I delete everything because I don't want to have any form of bias from my setup from last week. I now want a new set of like a fresh perspective or fresh point of view. I can't remember why I called for the buy because I didn't write the notes. That's why you should be writing notes. That's why you should be journaling. Okay, but yeah, I'm glad that one worked out. Okay, so I'm on the weekly and just trying to see what it's showing. I think it's showing bullishness, honestly, because number one, there is a breakout here. Okay, there was a breakout here. Price broke out, did the classic retest. Based on the breakout rule, it does a breakout, retest, and then continues in that direction. Okay, that's the classic, like the basic foundational rule for breakouts. Okay, although I've done back testing and it doesn't work all the time. Okay, then the second thing, it's also because why I think it's on an uptrend is because on top of that breakout, price is also making higher highs and higher lows. Okay, so on top of that breakout, it's also showing higher highs and higher lows. So I would say for Give me a moment. For ETH USD on the long term, it's definitely going up. Okay, it's definitely going up on the long term. The question is right now, are you gonna pull back before continuing up, or are you done with the pullback and then you want to continue up? Okay, so it's definitely going up. I just want to know if we are currently on the pullback phase for the bigger time frame, or are we on the moving phase? Okay, so let's see what the lower time frames are saying. The lower time frames will give you an idea of where price is moving. Okay, so another trend line breakout. I did not anticipate Ethereum to bounce so fast in 2 days. It went from 3,006 to 4,001. Because I do want to re-enter Ethereum. I mean, it's structurally, it's not giving a lot of information. It could be like on a very short downturn. Okay, so it looks like it's doing a pullback. It looks like we are on the pullback phase, but the question is, are you done with the pullback, or are you done with the pullback? Are you still going to continue with your pullback for now? Okay, so that's okay. What I'm going to do now is just highlight zones. Okay, I'm going to highlight support and resistance zones. And those zones will tell us a story of what we're going to do next. Price is in the middle of those zones. Okay, I have a rule. If price is in the middle of nowhere, I don't have a trade, but I'm gonna try to see if I can get an entry for later. I'm just not right now very confident with the direction. I do think that it is still moving on a downtrend. Okay, my best bet for Ethereum is that if it pulls back, okay, there is a overlap here. Do you guys know what overlap? So for the new ones, overlap means that a resistance turns support or a support turn resistance. So there is a clear overlap happening here. So price came here one time when it was this zone was a resistance, 2 times, kind of many small ones, 3, 4, 5, 6 times if you count the micro ones. And then there was a breakout, and it came back and became a support. It broke out again, then it became a support again, then came down. Okay, so then it broke back up and then broke back down. So could this be a support again? Okay, could this area work now as a support? Let me see if I change the size of that box, will it matter? Okay, I'm currently still bearish for Ethereum. I just think that it's a pullback. I just don't know that okay, just very short term. On the long term, I am definitely bullish for Ethereum. Okay, I vouch for Ethereum, I vouch for Bitcoin. I am full on for cryptocurrency. Okay, I just don't know. Okay, it could be that Ethereum might just reverse right now in this gold box. Where in this gold box? Okay, might the 50%? 1, 2, 3. The 78.6. Nope. There's resistance here on the 50%. So it could just be here. Do you see that cloud? Okay, so the cloud works as some form of resistance. I know a lot of profitable traders will be looking at me and thinking, why are you using Ichimoku? It's such a lagging indicator. Okay, but I mean, I've been using it for so long and it has made me money. So it doesn't matter what people think. What matters is what makes you money, and Ichimoku has made me money. Okay, so this kind of resistance here where this line is, so it could possibly be the entry. Okay, could possibly be the entry. The take profit will be here, and the stop loss will be there, and the take profit. I mean, you don't aim for the next swing though, you usually aim a bit higher. Okay, so this will be my take profit. I'm gonna get rid of this. I'm gonna see what RSI and stochastics are saying. Stochastics is saying no, that's not the entry. RSI, are you telling me that this is the entry? Okay, so what I want to see is price kind of reaching some kind of resistance. Nope, makes 0 sense. This makes 0 sense. I cannot use stochastics for this because stochastics is not giving me any relevant information right now. Okay, that's why you need to backtest and you need to test out to see if it's working. Yikes. Looks like a bullish divergence. Okay, if you see here, price is just moving in a nice downtrend. But here, price already broke out. I don't have enough supporting for this, so again, this will be a not high probability trade, and it's a 0.5% trade, lower risk. Okay, so that's all I have for you guys today. I actually might get into this. If price doesn't reverse here, then the next place that it's going is probably back to the last swing high. Okay, if price doesn't reverse here in this area, in this gold box, the next area it's gonna aim to go is probably back to the swing high. Okay, so that's all I have for you guys this week. I will see you guys next week. I'm doing a Bahasa webinar tomorrow for IC markets, but the topic is not live analysis session. The topic will be, it's a topic. I can't remember what I'm teaching. I think I'm teaching some kind of technical analysis. Okay, but it will be in Bahasa. So if you don't speak Bahasa, please don't join. Just join the English ones. Okay. Okay, bye everyone. Take care. I will see you guys in a week. Bye. Okay, let me just say bye to everyone. Okay, bye Chris, Jamilu, Andres, Clinton, AJ, Buddha. Did I say Andres already? Yes, I did. Okay, bye everyone. Take care. And Bob, well, that's me. But yeah. Bye.